Yeah, we're good. How you doing today?
Good, good. So how you doing?
Good. It's been a good week, so
Well, that's good.
back from that drawdown.
That's always good.
Yeah, the counter trend systems that I just implemented have really done well. So I obviously pulled some questions from my community to ask you during this session. And we had a couple actually really interesting questions that we don't talk about very often. They're more of we know the answers to, but we may not share them in the social space. So let's get started with those questions. And I'm
Okay.
excited for our answers. I think we'll just start with you for every answer. And then if I have anything to add, I'll add it after you're done, if that's cool with you.
Okay.
So the first question, and I love this one because I'm actually working on a tool that's similar, is what is your opinion on software that data mines for potential strategies, such as, Build Alpha, Strategy Quant, and the tool I'm working on called StratGen. Um, I know that you have a tool as well, Kevin, called Multi-Walk that,
Hmm.
correct me if I'm wrong, one of your students built and that you use as well. So what is your
Yeah.
opinion on the data mining strategies? How does multi-walk differ? And what are some potential issues you can come across with those?
Okay. Well, first, yeah, what multi-walk does is it actually just kind of automates a lot of the testing. So it doesn't really data mine in the sense that, what a lot of people look at data mining as, hey, I'm going to look through all the history of gold and find out what day was it best to buy and then maybe hold for a week and what day was it best to sell. And they'll look for like things like that. And so multi-walk doesn't do that necessarily. What you have to do with it is give it a strategy, and then it will test it for you and give you the results. And then there's some screens you go through or some filters to say whether or not that's likely to be a good strategy going forward. But you're right. There's a lot of software tools out there that will do this data mining for you, or just really just come up with random strategies and just test a whole bunch of things. And my opinion of it is you really have to be careful with it. Just to give you an example, let's say you had some data mining software and you ran it with the ES and you found out that every day if you'd buy at 9:02 a.m. and then sell an hour later, uh, or 58 minutes later or something weird, that would be profitable over the last 5 years. And so you use your data mining software to find that, and then you say, oh, hey, that's good. Well, let me put it in a strategy. And now what are you going to do? You're going to put it in a strategy and test it over that same data. And guess what? It's going to look like, hey, this is a good strategy. When really all you've done is you've found what could be a fluke. It could be real, but you don't really know. But yeah, I think what a lot of people do is they say, well, I don't know if it's real. Then I'll put it in a strategy and I'll test it. And if it works there, then I know it's real. But they've tested over the same data. And that's my big hang up with that. So what I always tell my students, hey, if you want to use some of those tools that are out there, and I've tried some of them, uh, don't use it on all the data. Just use it on a little bit of the data to kind of get an idea. Hey, is this good or is this not good? And then go to your real testing with all the data. But yeah, the idea, I guess, what it comes down to is you try to preserve your data as much as you can, your historical data. Don't mine it to death because it will tell you things you might think, hey, that's good. And it might not be at all. It might just be some kind of statistical thing that uh, happened and it's not going to work going forward. So I guess the key phrase here is just be careful with this data mining stuff.
Agreed. One of the tools that I'm built and working on called StratGen does exactly that. It does it essentially runs an optimization to find ideas for strategies, right?
Hmm.
And the reason why I built it was I was getting sick and tired of coding strategies from scratch every single time. I was like, there's got to be a faster way to test these strategies. I don't want to code a Bollinger Band every time or an RSI every time. I want to be able to
Right.
generate the code automatically. When I use it for myself with my own strategies, you're totally right. I only use it on a year's worth of data. I'll use it on a small amount of data. And once it finds some good strategies that usually have the metrics that I'm looking for, like a good return to drawdown, then I'll test it out of sample with completely new data and see if it decays, see if it does better. I'm looking for it to do ideally better. And I'll test like in a day, maybe 1,000 to 10,000 strategies, and probably only find a couple that are actually good, that do well out of sample. A lot of them just decay a lot.
Yeah.
And I think you can't just optimize a strategy and find ideas from 2008 to today. You want to use a small sample size and then do an out of test period as well. So I think that's the proper way to use it. And maybe a lot of new algo traders aren't aware of that.
Yeah. So what you're saying is the software you're developing and some of those tools out there, you're using them not as test and validation of the strategy, but really as idea generation. And I think in that respect, that's a pretty valid way to do it because it's always good to have more ideas. And then when you have some of those decent ones, then you run those through your big tests and that's a good way to do it.
Yeah, and it's actually most of the time consuming period is actually testing with the portfolio in Excel and exporting the trades. That's the longest period of time. The actual idea and code generation is very fast. So
Yeah.
yeah, I think we can both agree, use it for idea generation, but don't use it as an end all be all for your live portfolio with real capital. It should just be for idea generation. Then from there, you got to test out of sample, maybe do some market regime tests as well, which
Yeah.
we both talk about. Um, so Kevin, your overall opinion, you don't use them. You find your ideas the old-fashioned way, either through books, online, and then you use your multi-walk software to test in different markets and different time frames, but it doesn't
Yeah.
find ideas for you.
Yeah, basically. And yeah, it's ideas once you start looking for them, they're not that hard to find. What they are hard to find, like you said, the coding part, the putting it all together part, that is a little more cumbersome. Where it sounds like what you're doing is automating some of that, which that could work out pretty nicely.
Mm-hmm. One thing I like about TradeStation is it's a lot easier to code than NinjaTrader. NinjaTrader is much more hands-on, much more object oriented in a way.
Yeah.
So TradeStation does save you a lot of time with that. Okay, I think we can end there with that question. I think we got the gist of it. The next question is, and this is an interesting one. This is more from me actually, because I know you trade a lot of swing trading strategies. So obviously, swing trading strategies you're holding a position for, usually over that session close of the future session at
Right.
5 p.m. Eastern. And I know you've told me this time and time again, most of your swing trading strategies pass. You have a couple day trading, but usually the day trading doesn't pass. Why is that? Why do you feel like the day trading strategies are just not passing as much? You're not finding as good quality strategies compared to, swing trading strategies and holding positions longer with automated systems.
Well, I think there's a couple of reasons, and along those lines, I'd love to have just all intraday. I mean, that would be nice, and just go home at the end of the day. Well, I work from home, so come out of my office at the end of the day and not have to think about things until the next day. So I definitely, and a lot of people are like that. They have that bias that they just like intraday, and that's fine. The problem is with intraday, there's a couple things that I think, and I don't know for sure. It's one of those things where you notice something and then you try to come up with a reason for it, and well, is that really the reason, or is that just the reason you came up with to justify what you're doing? And the one thing, there's a lot more noise in intraday data as far as you look at like a 1 minute, 5 minute, 10 minute, there's a lot more back and forth. There's really not big trends that there could be in swing trading. You could be in a swing trade for a couple days, and if there's a nice enough trend, you do pretty well. So, like for example, I think it was last week or the week before, 30-year Treasury bonds went just skyrocketed really quick, and I happened to be long. And then I turned and went short, and for a couple days they went just down, 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 down. And so I was able to take a good chunk out from the long side and the short side, where maybe on an intraday basis, I wouldn't have been able to do that, or at least take as big of a one. Swing trading tends to be fewer trades, which I think is nice because a lot of people think they have to be trading like 10 times a day or 50 times a day. And the problem is the costs really add up. So that's another facet to it. If you um, the best intraday systems I've ever found trade one, maybe two times a day. And I found what they're trying to go for is they're trying to identify maybe days where there's going to be a long-term trend. Long-term means during that session, and just ride it the whole time. They don't try to
Mhm.
scalp or get out for a few ticks here and there and then reverse and do that sort of thing. They try just to get it right and then stay in it. And I think that works better. Now, as far as like testing goes, it's definitely tougher come up with intraday strategies. And maybe part of it's, hey, I like to test over 10 years or 15 years of data, and maybe that's part of it. So one of the research projects I'm actually working now is to test over a shorter period of time, and maybe 5 years is better. I'm definitely never going to go the path of, hey, the last month this strategy worked well, which is what most people doing intraday strategies do. They go for 1 month or maybe 3 months and they think that's good enough. I'm never going to be in that camp, but maybe something long, a shorter period than 10 years, maybe that's a way to go. So, the testing period maybe is something to look at. And like I said, I'm doing research on that right now
Mhm.
where I'm running, I think I'm going to run probably about 100 million back tests of different strategies, all intraday, just to see what kind of pops up. And then probably the last piece of that intraday versus swing trading is, I said, hey, I like it where I can just go home and not have to worry about it overnight. There's a lot of people like that. That means there are people who are willing to take that overnight risk that something bad will happen. Trading to an extent as insurance, well, then the people who hold overnight when no one else wants to, they should get like an insurance premium, because I mean that's in effect what they're doing. They're insuring a lot of maybe mutual funds or other, hedge funds, that kind of thing, where maybe they don't want the overnight risk. And so speculators are willing to accept it for a little payment and as in like an insurance premium. And so I think over time, being willing to accept that overnight risk, that weekend risk, should pay off a little bit. Now, unfortunately, it's not like every day you can open your account and say, oh, hey, I was paid $100 for my, premium kind of thing. That doesn't happen, but I think there is that risk premium to hold overnight that does help a little bit.
Okay. I love it. So just to summarize those, there's a lot of noise with intraday, so that
Yep.
can cause a lot of strategies to fail. The second point was, sorry, I forgot that one.
I don't know because I was talking a bunch of things,
Yeah.
but another point would be just the test period
Yep.
involved. And then the third one would be the insurance premium
Insurance.
kind of effect. And then actually even a fourth one would be just the amount of trading you do with intraday, or how
Hmm.
most people look at intraday. I mean, there's people out there who say, hey, I got to trade 50 times a day. My opinion always with that is, I don't know how you can find 50 edges or one edge 50 times, or even 10 edges that show up 5 times a day. That just seems crazy to me, at least based on my testing, to find one edge, and then you look for another, oh, like I got two edges, in different markets. But finding edges is tough. And I think the less trading you do, the better off you are in the long run.
So I'm the opposite of you. Most of my strategies are intraday strategies. Definitely trading less does do better. When I have more volatile strategies that have higher drawdowns and higher number of trades, they usually don't perform well in a live environment.
Right.
For example, I'm trading over 30 strategies right now, and the best days only 5 or 6 of them will enter, right? And I've learned that over time with intraday, you don't want to be trading too much, right? You want to find
Right.
those good quality setups, those strategies that have a good high average trade amount, a good return to drawdown for each strategy, and trade those, and not really, win rate and number of trades. Just they're useless metrics. You just want strategies that perform well and are robust. And most of the best strategies, they just trade once a day. They'll find a trend and they'll buy and hold till that session close, or short and hold till that session close at 4 p.m. or 5 p.m. Eastern. But I do miss out on a lot of overnight moves, right? Because
Yeah.
I'm not trading overnight. If we look at last Monday when we had that NASDAQ, was it last Monday, that NASDAQ 5% crash? I didn't make any of those shorts overnight. I did
Right.
well during the intraday session, but yeah, most of the money made was shorting overnight, and I didn't have any play in that. So there's a pro and con to it. You do take a bit more risk swing trading, but you definitely can find more edge with it.
Yeah. Yeah. And along those lines, a lot of people. So you mentioned you have 30 strategies and maybe only five or six trade in a day. And then, a lot of people can't do that, just can't handle it. So let's just say you have five or six that go today, and today's gonna a big up day, let's say. And at the end of the day, a lot of people won't be like, wow, yeah, well, I did pretty well with my five or six. They'll be thinking about the 20, 25 other strategies that didn't fire. Well, there must be something wrong with those,
Mm-hmm.
because why didn't those get in? Why are those on the sidelines? And people really, I've seen people get really upset when they miss a move with the market, with any market, because their strategy didn't fire. They have this. I think a lot of people have an unrealistic expectation of algo trading, that it's got to hit every major trend, and even if it's an intraday trend, that's just not true. I mean, I have strategies where I sometimes watch during the day and I'm like, I see gold going up. I'm like, man, I wish my algos would go long.
Me too. Me
They
too.
don't, but they don't. And it used to bother me. But now I'm like, well, okay, I'm not going to get every trend. I'm not going to hit every, easy home run kind of thing, because you probably get it too. I get people emailing me and say, "Oh, today was an easy day." I mean, because the market moved in one direction.
Yeah,
I'm
define
like,
easy.
well,
Define easy. It's
yeah.
hard to
I'm like,
define with this.
yeah. I don't look at that. Maybe my algos caught it. Maybe they didn't. But you know, you can't dwell on that, on what you miss. You just got to focus on, well, hey, over the long run, this algo should do pretty well, but it's not going to hit everything.
What's more
Give
important
it.
is just following your models, right?
Yeah,
Back
yeah,
tested a system, you've coded it away, follow it. That should lead you to success. So,
yeah.
um, and that'll go into our question in the future, a couple questions from now. Okay, so that was great. The next question, I get this all the time, and I know this is a very simple answer, but I like to share stuff on YouTube and socials because a lot of other people have this question. Do you trade multiple strategies on one account or one account per strategy, and why?
I do some of both. So, like right now, I think I have a couple different accounts, and I'm trading different strategies, different markets in each one. And through the years, I've done a lot of different things where I think at one point had five different accounts because I was trading different strategies. And especially with TradeStation, the older versions of TradeStation, if you wanted to trade two soybean strategies in the same account and automate it, it was pretty tough because the strategies interfered with each other, and it didn't work out too well. So I had to trade them in separate accounts. The problem with that, though, is let's say I'm long soybeans in account A, short in account B. The way at least TradeStation was, and a lot of brokers are like this, they treat each account as separate for margin. So I would need margin for the long in one account, and I'd also need margin in short for the other account. They didn't commingle margin. They didn't net out your accounts. Some brokers do. They didn't. And so then basically I was a lot less efficient with my margin usage. And so that wasn't good.
Mm.
So with TradeStation 10, it's a little different. You can actually trade, and it works really well, where you could trade both those soybean strategies in the same account, and they work perfectly together. Well, they don't work together. They don't even know each other exists. But people get hung up on, well, wait, I'm long and I'm also short. I should be long and short, showing in my account. And in Forex, that's the way they've set it up, at least outside of the US. You can be long the Euro US pair, and you can also be short. I mean, but really you're just flat. That's the way futures are. That's the rule. You can't be long and short in the same contract. And that throws tons of people off. Where, well, wait, uh, yeah, but if I'm flat, then I'm not going to benefit from my long strategy, uh, when the market goes up. And I'm like, well, yeah, but don't forget you had your short strategy that was losing money. So you're still the same net. It's very hard for people to understand that.
Mm,
But what I recommend for people to do is just do the math, and you'll find out that it works out the same. And it actually probably, depending how you do it, it might actually be cheaper because let's say you had a long trade and a short trade at the exact same time. Well, it's better just to be flat, and then you save yourself some slippage and commission by entering a long trade and a short trade. But that depends too on your trading software. It might still want to fire two simultaneous opposing signals.
mm.
The other thing you gotta worry about, this was a few years ago, where if I had, let's say, 5 different crude oil strategies, and um, my broker called and said, "Hey, you can't do that," and I had them in separate accounts because you're long in this account, you're short in this account, so you're basically trading with yourself, and that's illegal. It's not permitted by the exchange. I'm like, no, that's not what I'm doing. I'm trading different algos in different, or it could be the same account. It doesn't matter. It ended up going up to the CFO of this brokerage where I had to explain it in detail. Well, this is what I'm doing. And he was like, oh, okay. And then I was allowed to do it, which amazed me because I can't believe I was the only person doing this, but
Hmm.
maybe I was the only one who got caught. Well, caught, it wasn't anything illegal. So, um, yeah, so it depends on your broker, it depends how you set things up, but the thing to realize is you can trade multiple strategies in one account with the same symbol, different symbols, whatever you want. Your account at the end of the day is just going to be your net position, no matter how many strategies you trade.
Yeah, a
Hopefully that
lot.
kind of answered it.
I think it does. Yeah, I think a lot of people don't think that you can net your short P&L and your long P&L from the same strategy. And whatever at the end of the day or the end of the trade is, that's what you're going to be left up with. So I get this question all the time. I mean, I'm not going to make 30 different accounts for 30 strategies. I just want to trade in
Right,
one account. And yes,
right,
I trade a lot of NQ and ES. So some strategies will, if I'm net long and then a couple short strategies come in, I'm going to be flat. I'm going to be in no positions. Now, hypothetically, my strategies are still going to be in a position with an unrealized gain,
right.
but until one of them exits, then the rest will re-enter, and you just take the net at the end of the day. And if you have good strategies, it should just smoothen your equity curve, right?
Right.
Um, you, you
Yeah.
you you want on the reversal days, right? You want some strategies to start entering on the other directions, and then on the trend days, if you may be right, and that might be your big winner days, but on reversal days, you do want those other entries coming in, and you might take some losses from your longs or losses from your shorts, but maybe they'll net out to be profitable. So um, I'd say just trade one account, keep it simple.
Yeah. And for anyone who still thinks, oh, they're full of it, the math doesn't work out, go and do the math.
Yeah.
Run that long strategy, or do the math on that, and then add in that short strategy. The only caveat to that is you can't put, at least in TradeStation, maybe Ninja's the same, you can't put both strategies on the same chart, because then they will talk to each other. They will interfere with each other. At least in TradeStation, if you use like a stop loss, it, or the keyword open position profit, it will do the net of the chart. So if you have two strategies on a chart, it'll do the net. So that won't work. But if you put one strategy in one chart, another strategy in another chart, those two strategies will not know what each other is doing. They'll send their signals, their stops, their limit orders, whatever, just like they would. The math will work out. And for anybody who says, who still doesn't believe me, just either send me or send you the results, and we can walk you through it because I've been through this enough to know it's exactly the same thing. And usually the people who get messed up with this are the ones who are used to Forex, where you can be long and short. And then they go over to futures and you can't be long and short at the same time. And that they think that messes them up.
Hmm.
And it's not true.
Yeah, I didn't know that about Forex, but I've never traded it. So
Yeah,
interesting.
yeah, it's weird. Forex has a lot of weird rules, and if you're in the US, the rules are even weirder because of the first in, first out criteria, and it messes with things like a lot of people in Forex want to do grid trading, which you buy at certain levels up and down, and you can also sell short at certain levels. And outside the US, if you're long and short, it's a lot easier to do the bookkeeping, but in the US, it's a lot trickier.
Well, that leads to our next question. Why do you trade futures over, say, stocks, options, or crypto?
Okay. So um, for the US, so let's just talk about US people. That one big advantage of of futures over stocks is the tax treatment for gains. So with stocks, if you own a stock 1 minute and you sell and you make a little profit, the end of the year, you're going to be taxed at a short-term capital gains rate, which is higher than a long-term. Long term's a year or more. So if you hold a stock a year or more, you're going to pay a lower tax rate. In futures, since contracts expire all the time, what they have is they have what's called a 60-40 rule, where 60% of your gains, and I might have this backwards, I believe it's 60% is considered short term, 40% considered long term. And you could hold for 1 minute, a futures contract, get out, only 40% is or 60% is going to be considered long-term gains, 40% is short-term gains. So basically, and I think I just probably confused everybody, including myself as I'm talking, but the bottom line is the tax treatment is better for futures than it is for stocks for the holding period. The other part of that is the end of the year, you get a form from your broker and it says this is how much money you made
Mhm.
trading futures, and you just take that number and you put it on your tax form, where you don't have to include the whole list of every single futures contract you traded. So the bookkeeping or the record keeping becomes a lot easier. With stocks, you have to say, oh, I bought this day, sold this day, and you got to give them the whole list. So it's a lot simpler with futures.
Hmm.
Now, obviously, people outside the US can't really talk about what your tax treatment might be, but that's what it is in the US. Then, second, there's the leverage with futures. You can get, especially with day trading margins, you can control a mini S&P contract, which is now what, probably like 250 to 300,000, somewhere around there, of value. Hold it for a few $1,000s.
Mhm.
So you have a ton of leverage. The problem with the leverage is a lot of times if it works against you, it really hurts. It doesn't take that much of a move in the S&P to wipe out little accounts.
Mhm.
That's the downside to it. But if you use leverage properly, it works out great. You can get 5 to 1, 10 to 1 type leverage by trading futures. So there's that. The other big reason I like futures is you've got such a wide array of markets. You've got your ags, and that's what most people consider. Those were the commodities, wheat, corn, soybeans, that kind of thing.
Mhm.
You also have energies. You have crude oil, heating oil. You have currencies. You have metals. You have all these different sectors. And a lot of times they don't necessarily know what each other's doing. Like you have a coffee strategy, chances are its performance is going to be pretty uncorrelated to a silver strategy you might have. And that's nice. Where with stocks, hey, when the market does bad, everything tends to go down. And there's a lot of correlation that just appears when there's a market crash. Now, it might be a little different when you start talking about ETFs that are commodity based ones. I don't really look at those, but there might be something there.
Hmm.
But uh, futures is nice for that diversification. And, I'll find days or actually periods of time. A good example is a couple of years ago when the Russian-Ukraine war started, my grain strategies just took off. I was able to make like pretty much like a year's worth of profit in grains in a few short weeks because the market there went crazy. But since that point, hasn't really done a lot of my strategies. But you never know what's going to come up next. Maybe gold will, it's been trending up. Maybe it'll crash but other things won't. And so being diversified with all those sectors is a big part of futures trading, at least as far as I'm concerned.
Love it. Your camera, sorry, is a little bit blurry. I think it's trying to
Oh yeah.
autofocus. Yeah, I'll let you fix that up.
Yeah.
Um,
I've never seen that before.
yeah, no, it happens to me all the time.
Gosh. Huh. No, I'm still out of focus.
Hmm.
Okay, hang on one sec.
Sure.
Yeah, I just turned it off. I've never had that happen. Huh.
No, it
All
happens
right.
to me all the time. But is that why you really started? Like, if we go back to when you started trading, let's say it's 1998, right?
Yep.
And you're open up your brokerage account. At that time, was it maybe a magazine that got you interested in futures? Was it, there had to be some other reason why you started, because I don't think you were thinking of those types of 60/40 rule or diversification back then. Was it just a stroke of
No,
luck?
it was just how to make a lot of money with a little starting amount,
Mm,
basically. I got something that the old US Postal Mail. It was a brochure, a little pamphlet written by this guy who showed all these chart examples of, hey, if you would have bought sugar here and added on, you would have made a ton of money. And you only needed $1,000 to start. And I'm like, well, that's good. That's all I have. And it wasn't like stocks. Hey, I remember my first stock I ever bought was Walmart, and I bought like $1,000 of it because that's all I had, and it moved, but it was very slow. And futures, hey, you could make $1,000 in a day easily, even trading one contract or something. Of course, you could lose it too, and that's what most people, they're not thinking about the losing part, they're thinking
mm,
about the winning. But yeah, it for me it was really the leverage was the big draw. And then later on, hey, the capital gains tax, that's nice. And the diversification, oh yeah, that's pretty nice too. That helps smooth out the overall equity curve. And it's funny, I had seen that effect. Every year I'd have like 5 strategies that I'd look to trade, and at the end of the year, I'd have to decide, oh, do I want to still trade all those? And I would see one or two did really well, one or two were maybe break even, and maybe one did bad or lost money. Every year it was like that. And it never dawned on me that what I was seeing was really the diversification. Um, I just knew I couldn't rely on one strategy to get me through every year. Strategies would have great
absolutely.
years, and then the next year they might just go flat, and you never know.
Mhm.
So that kind of came later, that whole diversification thing.
I think for me, I started with stocks as well. And I remember my first stock was AMD
Okay.
back in 2015. I wish I still held it because it's done really
Yeah.
well. But yeah, I remember watching it day to day on my Interactive Brokers account. I'm like, man, this thing barely moves.
Yeah.
And then I got into options trading. This was all discretionary. I got into options trading and did okay. I made some money for a while. I only traded it for a year. And then I found out about automated software like NinjaTrader and TradeStation probably in 2018, 2019.
Right.
And when I picked up NinjaTrader, I was like, how do you trade options on this? It's not really designed for options trading, right? In
Right.
NinjaTrader, they kind of market more futures and Forex. And with my software developer background, I was like, oh, okay, what about this futures things? It's kind of similar to options. And it's a lot easier because options, the symbols are like, strike this, call
Right.
put, and they're so complex. Or futures are, yeah, you do have the rolling contracts and the expirations, but it's always NQ and then the contract. So I think that's what the actually simplicity of automating it got me into it. Obviously, stocks would be the simplest to automate, or maybe crypto. But yeah, I think the leverage portion does spark some interest in a lot of algo traders.
Yep.
That greed a little bit, and it is very dangerous. It usually is dangerous for most beginners, but can be
Yeah.
extremely lucrative once you become an expert. So I think that's the main reason I like it, and I just like the liquidity too. I mean, If you look at how many ES contracts are traded on a day
Oh
compared to
yeah, it's huge. It's a
massive.
huge market.
Excellent. Okay. Next question. This one is one of my favorites. I want you to be specific with this. All right. I want,
Okay.
what you were doing that day, the date and year. What has been the best and worst trade you've ever made?
Yeah, the I don't know the best trade
Okay.
because
You always forget your winners, right? And
yeah,
you only remember
and
the losers.
yeah, the loser's the one that sticks, and probably the worst trade I ever made, and I talk about it in my first book, was back when I was still like discretionary trading. And looking back on it, I can't believe I did this, but just to give you some background, this was 2003. It was December of 2003. And what had happened in early or mid uh December, my wife and I were expecting our first child, and the child at 6 months was it was a stillbirth, and so we had to deal with that, the death and the funeral and all that. So that was December 12th. Then on December 17th, my dad died of cancer, and on his 75th birthday, he wanted to live till he was 75, and
Made
he
it. Yeah.
lived till that morning and died.
Mm.
So that's just the weeks coming up to this. It was either I think it was the 23rd, it might have been the 24th of December. We were gonna go to my wife's house, parents' house, which was about an hour and a half away. And for some reason, I decided, no analysis or anything, I'm gonna buy live cattle. And I only bought one contract, which turned out to be good. But I mean, it's crazy to even think. So, given that background, I shouldn't have been trading at all. Going through all these mental things, it was stupid. But I thought, well, maybe I'll get a nice trade, and that will brighten up the end part of the year. It'll make up for other things that were going bad. Placed the trade about, I want to say about an hour before the market closed, and wouldn't you know, like hour, right after the market closed, the U.S. Department of Agriculture or somebody announced that they found the first case of mad cow disease in the US. And right then I knew I was screwed, because everybody's panicking. Oh my God, mad cow. No one wants to eat steak or ground beef and stuff. And I had to sit through, I think, the Christmas holiday. And when the markets opened, live cattle didn't open. It opened lock limit down, which means you could not get out at any price if you were long. If you wanted to go short or you wanted to buy, somebody would sell, but basically there was no activity at all. I think it was 4 or 5 days. It just went lock limit down. The next day, lock limit down. There was no trading the next day. And every day the limits got bigger, because the lock what a lock limit is, for people who don't know. It used to be that every market had uh, a stop point. So like I think with live cattle, I think it was 2 points, at least when it started. So that means you could lose $800 a day per contract, but that was it. And then they'd bring everybody back the next day and start at that point, and maybe trade or maybe go down. So this went down 4 or 5 days, as I recall. Every day was a lock limit, and the limits got bigger. So towards the end, it was more. And by the time I could actually get out, I think um, I don't remember the exact amount, but it was thousands of dollars per contract that I lost, which in live cattle was pretty significant. And it's not like I had $1 million account. I was trading one contract, and there was a reason. It was probably like a $5,000 to $10,000 account. So basically, um, I probably lost at least half of my account within the span of a couple days. So that one really sticks in my mind as probably the worst trade ever. Um, but it also was something that pushed me more towards algo trading. They didn't call it then, they called it systematic trading. But to not just take these flyers hoping for like a little profit, this doesn't work. I got to do something different. So in that respect, it really wasn't my worst trade ever, but it's still the one that I remember. It's like,
Hmm.
oh my goodness. So past 5 or 10 years, I couldn't tell you what my best trade was or my worst trade was because I don't look at it of, yeah, I made $10,000 per contract with this trade, or I lost 10,000. All I look at is maybe the trades where I missed a trade or something happened caused me to lose money. So I'll give you an example. Had I'd switched brokers at the beginning of this year, or at least moved some money to a broker. And let's see, I'm trying to think. I'm not going to give names of brokers or give names of data
Fair.
providers, or any of that.
Fair.
But basically, I was in a bunch of markets, and overnight, this broker had rolled, or not the broker, but the data provider. This wasn't TradeStation either. It was uh, a third party type thing. They had rolled out some kind of switch where with the Japanese yen, they were 2 decimal points off, and somehow it snuck through. And so when they went, I was either long or short the Japanese yen. And when they went to calculate, my equity, it was off by a factor of 100. So basically, they said, "Oh, your account's been wiped out. So we better exit everything you have," because that's the way their software works. Like Interactive Brokers does that too. As soon as
Yeah,
you
kind
hit
of
a
fail
margin,
safes, right?
what?
Like fail safes, like on
Yeah,
their side.
they say, "Oh, hey, as soon as you hit a margin call, you're out." Similar sort of thing. So, I get up the next morning, I notice I'm not in anything. And wouldn't you know, at 8 a.m. or 8:30, whenever there was some kind of government announcement, took off. All my positions now were flat, and I would have made a ton of money. Well, I mean, relatively a bunch of money,
Percentage, yeah.
and I made nothing. And that's one I remember because I'm like, man, I had the algos right, everything was going right, and here some outside thing. Those are the kind of things that stick in my mind as far as like best trade, worst trade that are abnormal. But normally with algo trading, I just, hey, if I miss one, if I miss a trade, that'll make me mad. But if a trade just loses because of the algo, well, hey, I can't really do anything about that, other than, be a
Mm.
little upset.
Did
Hopefully
you
that kind of makes sense.
did you call that provider and be like, hey, what the heck? I want a
Oh
refund.
yeah, yeah. And
They did
the
nothing, right?
broker did stand up and said, "Hey, it's not my fault, but I'll take some responsibility for it." But um, most of the time, people think, "Hey, if the broker screws up, they'll pay for it." And I can tell you, after doing this 20, 30 years, trying to get somebody to accept blame, and by accepting blame, give you money as compensation, almost never happens.
Mm.
And this goes back even to, I remember when I used to trade where you call a broker on the phone, "Hey, buy one Christmas wheat," and uh, you'd get a fill in the U.S. mail, and then the next day it would say, "Oh no, your fill was really at this." And guess what? Guess how many times the fill was better when they sent me that second notice? It was zero. It never happened. Fills got worse, and I'd complain about it, and they'd be like, "Well, too bad." I'm just like, man, I'm getting screwed. It's trading's hard enough, and now you're screwing me. And that's one thing. People getting into algo trading now, it's all electronic, so there's not mistakes like that, but there's other things that happen. Somewhere in that fine print, when you open an account, you've probably said, "Hey, I agree to waive all my rights as far as if something bad happens, you're not the broker, you the data provider, you the exchange.
Mhm.
You guys aren't responsible." You give up a lot of that. And unfortunately, it does happen. And because I see people on some of the trading forums, "Hey, my broker, something went wrong, and my broker should compensate me." I'm like, "Yeah, good luck with that."
They're not going to do that. Yeah.
Just doesn't
Well, they
happen.
have so many clients. I mean, they're
Right.
making good
Right.
revenue. That's very interesting. The live cattle thing, I remember reading about that, and that's tough. I mean, it was halted, right? You literally can't do anything.
Yep.
And maybe you could have flipped short and took the loss in the long trade, but
No,
that's
I mean,
hard.
you couldn't even do that. The only thing I could have done was possibly uh, done some options, because some of the options we're trading,
Mm.
And I could have kind of hedged that long position with options, but the problem with that even was because the futures weren't trading, the spreads on the options and the volatility were huge. So it was going to cost me so much money to do that if you even could execute it, that it was basically going to be a wash. And
Mm.
the bad thing, just to add misery to that trade, is probably within a couple weeks after it. So I got out, as soon as the market started trading. A couple weeks after that, the price was back to what it was before the mad cow. So it was really just a temporary thing. And then personally, that year on New Year's Eve, I slipped downstairs and dislocated my shoulder and ended up in the hospital. So it was like, I was like, I've never had since then a worse like month
At least you
than
got it over with. Yeah.
yeah, yeah, it was awful, but yeah.
Cool.
So those are the ones that stick with you. It's always the bad trades and the bad situations.
Yep, same here. I think my worst. I mean, I don't look at it per trade because I'm more of an end of day type of how did the portfolio do end of day. All right, and then I do look at individual systems and how they performed. And I remember last 2022 in February, I had this system that would change the contract size. So some systems would trade double the size or triple the size, and some would be at one lot. And I got to a point where it basically was like anytime a system lost, the next day I would go up the contracts, and then there was a maximum of five. And I got to a point where a lot of the strategies were trading at 5x.
Right?
And yeah, I had a losing day, and it was multiplied by a lot
By
more
by
with
five,
those
yeah.
losses. And
Ugh.
I, I, I think it took me the rest of the year just to get out of that. Thankfully I did, but that was tough. And then the winning days, I don't really remember that much, especially per system. I think in January this year I had a really big day. Percentage wise was probably my biggest day. And even then I still messed up because I ended up we had we had this automation that would take profits around noon. It was like around noon or 1 p.m.
Uh-huh.
And we didn't back test it or anything. We were just like, oh, we just want to take profits at noon just to lock in some gains. And we took the profits and we missed out on an additional 20-30% the rest of the
Wow.
day. Maybe we'll talk about that in a separate video, but sometimes, you need to
Yeah.
back test stuff. Sometimes the back tests tell you to trade 24/7, but emotions get in the way of that and not following your models. But maybe we'll talk about that another time. So yeah, I think, and I've had lots of big loss days with technical errors too. Systems not matching the back test if they're too complicated. I had this Excel sheet that I would put trades in, and one time it bugged out and no trades were coming through. And I missed out on a ton of money because of this Excel lockup. And
Yeah.
I've learned just to keep things simple and try not to build third-party apps around your trading system because one bug can cause you it can make you money too, but usually it loses you money.
Yeah. And I think the bigger damage isn't even the money when those kind of things happen. It's the psychological damage that it does to you. At least for me. I always remember the bad things, and those are what stick. And I don't remember the good times or the good things that happen. And
Mm-hmm.
and for anyone out there who feels the same way, one thing you can do is just record all the anomalies, all the screw ups, let's say, and just write down how much it cost you and or how much it made you. And what you'll find, at least this is what I found, is I didn't nearly lose as much money as I thought. There were a lot more times where things went in my favor. So, the internet went down for a minute and I missed a trade. Well, you would assume, oh, I probably lost money on it. Well, there was times where that worked in my favor.
Yeah.
And it made me feel better about, hey, sometimes good things are going to happen, sometimes bad things. And you just, it's the cost of doing business. You just got to deal with it. But what you can do then too, if you have this list of all the times things got screwed up, you can, if you categorize it, you can sort it by what cost me the biggest amount of money the last 6 months, for screw ups. Oh, it was because I had a strategy that had this particular type of code in it that didn't work all the time, or something like that. And then you can take some steps to actually say, okay, well, I'm going to get rid of those. And that really helps you improve too. Once you see that number that, hey, this cost you $10,000 in the last 2 months, and you'd be like, oh, I got to fix it. So that's something I think I found really helpful.
Yeah, I've been doing a better job at that. It's easy to be lazy on not recording your daily P&Ls, your daily mistakes or trades,
Yeah.
but do it. It'll save you a lot of money in the future.
Yeah.
I know we're running short on time, so we'll get over with this last question before you got to go.
Okay.
Uh, Prop firms are the talk of the town now, right? All of
Yeah.
these prop firms trading with simulated money, getting payouts. I don't trade. I did try them in the past with no success or avail. Um, how do you view these prop firms? Do you use them? And are they right for most people?
Yeah, I don't do it. There was a time, I want to say 10, at least 10 years ago, Top Step was like the only people in town doing this. And I think I did a couple webinars with them and did one of their combines. And I was like, oh my God, they have some squirrely rules for, your protection, supposedly. So I never really got into that. Now I know there's a ton of them out there. A lot of them don't allow algo trading. I mean, they go as far as saying, "Hey, we want to see a video where you show us your face, your keyboard, your mouse, and your screen all at the same time." I don't know how you do that. You must have multiple cameras, but to prove that you're not algo trading, and you got to tell us how you're trading. There's a lot of hoops. What it comes down to, probably for 90% of the people, it's you're paying to trade on a simulator, which used to be free everywhere. And then you almost pass. And so, oh, we'll give you a discount if you try again. And that's where they get their fees from. Most of these prop firms are not trading in the live markets. Uh, they're just letting people sim trade and fail, and then they collect all these. So I tend to tell people to just kind of avoid those because I don't see the value in them. But I do see people, whether it's true or not, I don't know, but people saying, oh yeah, I just got paid 20,000, 50,000, and maybe there's a couple people like that, but the vast majority people are losing because true prop firms like what is out there. They call themselves prop firms, but they're really simulator firms, is the way I look at it. And that's where they make their money, is by people failing and coming up with these crazy rules of how much drawdown you can have, and intraday and all this stuff. And just make all the rules really do is just make it tougher for you to succeed at it. As you can guess, I'm not a big fan of those. Can you create an algo? Let's say you found one of these so-called prop firms that allows you to do it, algos. You could probably create an algo to do it, but it's going to be tough. It's going to be a lot tougher than a normal algo where you don't necessarily have all these constraints
Mhm.
on you. So just for example, they say, oh, well, you can't trade during news announcements. Okay, well, if you're going to create an algo, now you've got to program both real time and historically when those type of news announcements, maybe they're Fed announcements, when they came up, and make sure you're not trading during them. Because they'll say you traded during this Fed announcement, you're done, and you failed. You'd be like, oh man. I think in the long run, what most people do it because they don't have a lot of money to trade with. So my response to that would be, if you don't have a lot of money, you shouldn't be trading in the first place. But a better way to go is to get educated, learn how to do things the right way, and build up your account at the same time. I mean, way back when I was doing this part-time computer programming jobs, I would do anything just to get more money for trading capital.
Mhm.
Uh, and then when I had enough, then I could trade. Because when you start out, that's most people's biggest is their risk of ruin. And when you start out with $1,000 account or whatever, a real small account, you're probably going to get wiped out. And that's even if you have a good strategy. It's just randomness. You flip a coin 10 times, and there's a possibility that 8 of the 10 are going to be heads. And if you bet incorrectly, you let's say you had to bet each one and you size those bets incorrectly, you'll get wiped out.
Hmm.
And it's not because it was a bad coin, it was random luck. And in this case, bad luck. And people don't really appreciate that. But I don't know if you feel different about those prop firms, but that's kind of where I'm at with it.
Yeah, I mean, a real prop firm, from what I've researched, is usually you got to bring up a lot of capital,
Yeah.
and they will maybe match it. Maybe you give a little bit more and then do a profit share on that. Whereas these prop firms, you're paying some monthly fee, and they seem to always be doing discounts. I know what's essentially happening is, the fees that they collect from other people, they pay the 1% winners that can actually build good trading systems,
Yeah.
which I guess if you're making money out of it, it's beneficial. I mean, they're great business models to run as a business. Ethically, I'm not sure, but I you can trade on a sim account for free. I mean, you can open up a Ninja or TradeStation account. Um, Maybe you got to fund it with $500, but you can trade that sim account for free and get the same knowledge and screen time with your algo trading systems and not have to pay that monthly fee. So yeah, I'm not a huge fan of them. I don't think they're the best for people out there. I'd rather just trade on a sim account for free. And if you don't have enough capital, then yeah, you just got to find a way to make more money. I funded all my capital from my job, and just saved a lot. And
Yeah. And
um,
that's the way to I think that's the way to do it. But yeah, the fact that there's so many of those firms now tells you that there's a lot of money to be made doing that sort of thing, running those types of firms. But every once in a while too, you hear about I think a couple months ago there was one that just uh shut down and
yep,
whoops, we're not gonna pay everybody. Maybe a couple people just won a lot of money and then the firm
bankrupted them.
quit and said, "All right, we're done." And I think that's one of the reasons they don't allow algo traders. It's not because algo traders are necessarily that much better, but I think what they're worried about is if they have algo traders, there's going to be some algo traders who exploit the sim engine or whatever. They're going to figure out a way, and especially if it's not a real market, because uh, if it was algo traders trading real markets, they wouldn't necessarily do as well. But there's ways you can exploit the sim engines probably, and that's what they're trying to prevent by just saying no algo trades. So just for people out there thinking, oh well, algo trading has got to be the best because all these firms don't allow it, and that's not necessarily true. I think it's more they're more worried about people cheating with the algos and taking advantage of some kind of quirks in
Mhm.
the whole setup.
Yeah, that would, if people found that out, it might bankrupt all of them. So,
Yeah,
um, okay. So yeah, prop firms in general, both we're not big fans of. We don't use. But if you made money with them, then props to you, I guess. So,
yeah, yeah.
um,
And there's people who supposedly do, so good for them.
yep, that's all that matters. Well, thank you, Kevin. That's all the questions I had for today.
Great.
So I think we answered a lot of good beginner questions. We had some more intermediate expert questions as
Yeah,
well,
we got a
and
wide array of questions and answers. So
different
it's
topics. Yeah.
always great talking to you, Jacob.
Always. So I hope you guys learned something today. I know I did, a little bit more about Kevin, and I appreciate you, Kevin, for hopping on. So thank you, man.
All right. Yeah, it's been great talking to you.